Welcome to the Trades Podcast, a podcast about the business of home improvement and promoting the trades to young adults.
Yes, that's exactly what we're doing. We are the Trades Podcast, spreading out the knowledge, the skills, the advice, the suggestions, the strong suggestions probably today to all the tradespeople out there, whether you're a business owner or a apprentice or someone that works in the office and you're looking to enhance your business, enhance your growth, or just your life. You can definitely do that through the trades. I'm Danny.
And I'm Jeff. And you forgot something, Danny.
What did I forget?
We have some fun. We put
That's
out,
right.
we try to have some good laughs. We try to get some very entertaining guests on.
Yeah, technology is not always on our side, but we make it happen.
That's it. Well, like I said on the last recording, I was in the construction field and I had 2 hammers just in case.
And that's sometimes all you need right there. Well, cool. We're excited to get this kicked off and started because we're having a guest on today that we haven't really dove deep into in a while, which is in the financial realm. So we're excited to have Kim Kim Pike-Walters in the house here. Got to give the full name for you, Kim.
Yeah,
welcome
you do.
in.
It confuses a lot of people. 2 last names.
Yeah, well, welcome in. We're excited to have you on and talk about your business, your financial coaching, and but yeah, go ahead and introduce yourself to the Trades Podcast world.
Yeah, first of all, thank you so much for having me, both Danny and Jeff. Glad to be here. And Jeff set a high bar when he said we're going to have some fun because most people don't think about money as being fun, but I will try my best here. So I am Kim Pike-Walters. I am a financial coach for small business owners. I help them create more stability and predictability with both their business finances and personal finances so they can really use money as a tool to enjoy life instead of constantly worrying about it.
Absolutely. Well, isn't the result of that create a lot of fun for you and your clients?
Yes, good point. Yes, money definitely can be a good tool for having fun.
It's not the everything, but it certainly helps.
Yes, agreed.
Yeah, and as you go through, the business that you might be helping, how many of contractors do you see yourself like working with right now?
I work with a lot of small business owners, primarily small business owners, but haven't had the good fortune of working with too many tradespeople quite yet. I have a photographer as a client, an occupational therapist, some various small business owners, but
yeah,
looking forward to working with more tradespeople.
Yeah, absolutely. Because, when it comes down to numbers, it's always one of those things when you hear as an entrepreneur, numbers don't lie. So it's always mentioned like learn your numbers, understand them so you can maneuver them and really just be able to have a future outlook of what your business may need, what it is falling back short on, or what you need to pull back from. So yeah, I mean, I'm excited to kind of hear a little bit more about, those steps that you may take from someone from A to Z.
Yeah.
Yeah.
Well, let's position yourself a little bit more for you, Kim.
Yeah.
The numbers, like Danny said, don't lie. They can be manipulated, though. But do the fundamentals that you have that you work with clients cross multiple types of businesses?
Yes, absolutely. It is, I'd really say the same fundamentals, right? Everyone is going to pay taxes. Most people are going to be paying off some sort of debt. Most business owners have inconsistent income. That's not the same every month, probably fluctuating expenses as well. So we can really look at some of those fundamental principles as being broadly applicable to small business owners. Lots of small business owners, tradespeople, other professions are going to need to be buying supplies in advance or materials in advance, maybe before they get paid for a job. So a lot of the fundamentals we're talking about here will absolutely be applicable.
Okay. And to set the stage a little bit more, is there a gross sales range or a profit margin range that you prefer to be in?
Yeah, so I am a financial coach, not a fractional CFO, as we were talking about before we hit the record button. And so, really, as a financial coach, I am helping people who are managing their own finances in their business. They will likely also have a bookkeeper and also have a CPA, but really helping to empower you to manage your finances yourself and give you the tools and systems and knowledge that you need to do that. Whereas a fractional CFO is probably going to be doing more of that for you. So I would say the business owners that I tend to work with tend to be a little bit on the smaller side in terms of number of employees. I did have one client who had about 18 employees, so that's a little bit higher. But I would say that differentiation is really, are you managing your finances yourself or are you having somebody else do it for you?
Yeah. So one of the daily, I guess, worries of most people in that range is, do I have enough money for Friday's payroll?
Yes, that is a common thing that I hear is being able to make payroll. And a lot of it starts with knowing your numbers. So I'd really encourage people to first take a look at your current state, your starting place, know what's coming in, know what's going out, and then that will help you understand, in advance if you're not going to be able to make payroll and give you time to adjust things. And we can get into a lot more details. I'm hitting very high level on it right now.
Yeah, no, feel free to dive deep into, maybe some stories or scenarios that you may find business owners in. Yeah, that absolutely is going to help.
Yeah. So one of my clients had this struggle of being able to make payroll, and it was less about not being able to make it and more about the uncertainty of knowing if she would be able to make payroll. And that not knowing was really challenging, not knowing until maybe the day before if there was going to be enough money. And so what we did with her as a starting point was looking at her current numbers, understanding what she had coming in and what she had going out, ideally for the whole month, but between now or that point and the next payroll period. And so that will give you a sense of, will you be able to make payroll? And if not, maybe you can transfer some money in from savings. Or if you have plenty of money, then that just, it gives you more information. You were talking about the numbers don't lie. And so having that information and that knowledge gives you more time to plan, more time to respond, right? Responding instead of reacting. So I'd say that's really kind of the fundamentals there, knowing your numbers. And then another big piece that is so helpful for entrepreneurs in this situation is really building up a buffer or a reserve so that things don't feel like such a panic. So I had a different business owner who was going to pay herself, and she decided to put herself on a weekly pay schedule. And the problem was that she didn't always have the revenue coming in consistently every week. And so every week it was a question of, am I going to be able to make payroll? Am I going to be able to pay myself? Am I going to be able to pay my business and personal bills? And so setting up those buffers, reserve, cushion, whichever word, same idea, was really helpful because then it takes away a little of the urgency of, I need to get this client deposit or this client payment this week or I can't make payroll. And so that process of creating a reserve is something I would highly recommend for everyone because it will help smooth things out a little bit. We know that your income is not going to be consistent and it's going to fluctuate. But if you can build up a reserve, it can really function more with more consistency. It's just, you're building that consistency for yourself. So with that client and that reserve, she can now pay herself the same amount every single week. Some weeks she has the revenue to fully cover it. Some weeks she can, let's say 75% cover it and 25% she'll pull out from her reserve. And so when I'm talking about reserves here, it's also important to note that it's not It's not like a savings account. It's not that we're saying, okay, you're saving to buy a house. We expect it to kind of increase every single week, every month until you eventually make this big purchase. The point of this buffer or this reserve is to fluctuate, is to go up and down and help you kind of weather the storm, weather the roller coaster of revenue, weather slow seasons. Or I think for a lot of business owners, every like week to week might be different, but maybe the winter might be slower, right? If you do air conditioning, it's maybe not a good example because they do heating as well. But let's say someone just does air conditioning, right? They're probably going to be a little busier over the summer. But by storing away some of that money during the warmer months that are busier for them, they're going to be able to have that security, that predictability when things are slower in the winter.
Yeah, it's absolutely a skill that I think a lot of business owners really don't have, is the ability to make the commitment of a reserve, savings, whatever you want to label it as, consistently when you are being I mean, if you can't make payroll, you're probably not paying your bill to the supplier, or, your tax reserves that you need to be putting away, or, the 20 other things that are calling on you to put your signature on the bottom of a check. Um, so do you differentiate that, or do you, like, take a look at the big picture of all these bills and, like, put
Yeah.
together a plan that, I guess, addresses them individually or as a whole, or
So we do, I work with my clients to put together a plan that addresses everything, all of those pieces. And I think that's a great point because it's not just one puzzle piece, right? It's a full puzzle that has multiple puzzle pieces. So you are having to balance things, right? Figuring out, am I investing in something? Am I saving for my reserve? Saving for taxes, paying off debt, all of these things are happening at the same time. And so prioritizing is definitely something that's important as well. Like I've had clients ask, should I be saving or should I pay off debt? And there's not an easy one size fits all answer, but you're absolutely right. There are multiple demands on a business owner's time, on their money, and figuring out how to balance all of those things is a skill. And we're not taught about it, right? Why is it that I, in English class in high school, learned about literary devices, but I didn't learn how to manage my money? One of those things I have needed to know, and the other one, not so much.
Yeah.
But go ahead.
Yeah, no, I was just going to mention where, it seems like a common story for a lot of, like Jeff had mentioned, business owners of a skill that they haven't developed or even been exposed to. Like you mentioned, like through school, through family, or through other even maybe small businesses that people may have worked with. Because through the contractors, when you're talking about small businesses, generally they have to get a license signed off and approved from a previous licensor, right? As
yeah,
one has a
I mean,
license.
whether you're a contractor or you have a specialty license that in California, the Consumer Affairs has, I don't know, dozens of boards that license you from cutting your hair to killing bugs to,
Right.
on and on and on. And
Yeah.
almost anything you do on a professional level is run through the Department of Consumer Affairs in California.
Yeah, and generally, a lot of these young entrepreneurs or business owners, they have this mentality of like, oh well, hopefully you leave on good terms, but hey, I want to build something of my own. But then they get into it and not really realize what it all entails. Hey, you have a passion behind your skill and your trade, but there's a whole nother business, and I mean the financial part that I found out as a young entrepreneur also is that the financials is a very huge and key piece to running your business, and like you mentioned, just not having that stress above your head. So I imagine, Kim, let us know. I mean, what's kind of like the mindset that you talk like when you first maybe like a discovery call with someone, what are you looking for in them that that you can help them out with?
A big thing that I'm looking for is are they looking for the type of support that I offer, right? I'm not a financial advisor. I'm not helping people manage investments or anything like that. So that's the first one. And then another big piece is if they're actually willing to put in the work, if they are coachable, because a lot of people talk about wanting to improve their finances or make changes. But change is hard, right? Especially at the beginning as you're establishing new habits. And so it's important to me when I work with people that people are willing to put in the work. I'm not requiring perfection, obviously, but consistency, right? And really putting in the effort, applying what we're talking about, and that they're not just going to quit when things feel a little hard. Because that's what I'm there for, to help support them. But it does take time, and it's not easy, right? If I'm trying to start a new exercise routine, it's not going to be all smooth sailing, right? There's going to be the aches and pains from working out, but also just trying to figure out, am I even doing the right thing? That whole
Mhm.
process.
Yeah. So do you get into the basic education of, you know, do you know how to read a P&L? Do you have an accounting system that tells you what your P&L is? Um, cash flows versus profit are definitely two completely different things. Uh,
Yes.
there's leaks all over your business when it comes to expenses that you really can't account for 'em in almost any business.
Yeah. Cash flow is one of the biggest things that I talk about with people, even if I don't necessarily use the words cash flow, because I say that word and some people's eyes glaze over. So we'll just say what cash is coming into your account and what cash is going out of your account. That is one of the fundamental things that I talk about with people. And that is the starting point, because that's what matters at the end of the day. And that's why a lot of companies go out of business or can go bankrupt, is because they don't have the cash, right? If it's great if you show a profit on paper, fantastic. We want to aim for that. But if you can't pay your bills when they come due, you have a problem. So that's really what I focus on with people. We start there. We start by looking at both their business finances and their personal finances, because for so many small business owners, those are very closely related. And we start with looking at where their money is currently going, right? What's coming in, what's going out. And then we're building on top of that with paying themselves consistently, saving for taxes, making sure their business and personal finances are separated. I had one client on the topic of paying themselves consistently. I had one client who, when she first came to me, was paying herself based on when her personal account would run out of money. Say, okay, it's time to run payroll. I don't have money in my personal account. And one of the things that we worked together to do was to figure out what amount to pay herself, and to pay herself that amount consistently. So now all of a sudden, what was previously like a roller coaster of income, now we're able to create some of that stability in her personal finances. So those are some of the fundamentals that I work with people on. And then, Jeff, to your point, we just kind of build on top of that. So absolutely being able to read financial statements and knowing what they tell you is a key component. And also, coming back to your original question, if I'm remembering it correctly on the financial education piece, financial education is absolutely part of what I help my clients with, but it's more than that, right? If education were the solution, we wouldn't have problems, because there is plenty of education out there. It's really applying that and putting it into practice that is the key, right? What differentiates what I do from someone who just does financial education. So learning it, then putting it into practice and working with it to make it a habit. And eventually make it something that doesn't feel so hard because you're used to it. You know what you're doing. Eventually I want managing finances to feel kind of boring, which may sound silly, but right, if things are too exciting, that probably means there's a lot of variability. So if we can get things to be kind of consistent and routine, that to me is a win.
Yeah.
Absolutely.
Yeah, I think it's something that like we were mentioning, like young or small business owners, they fall into. Just the consistency is not there, and or just not understanding how consistent they can already are, just not really seeing it themselves. And you mentioned, like, there's just so much out there, whether it could be YouTube, it could be paying for classes, and then but until you actually might have someone, like you said, if it falls into a category that they need someone like you to be right there telling them, and and not in the sense of taking over, but you're giving them the tools, you're giving them the knowledge behind it, because you're right there with them to give them a system to move past it. So so we talked a little bit about, like, from the beginning standpoint of when you would reach out, the discovery. Now, when do you see the consistency kind of come into play with some of your clients that you've been working with, where they feel that weight off their shoulders? What is the feedback they're giving you about what's next?
Yeah, so it's a little bit different for everyone. And part of it depends on people's starting point. But I would say after 1 to 2 months, we have a pretty solid idea of what is actually coming in and out of their account. And I say actually because people will give me their estimates at their first meeting, but when we start looking at things, we realize that that is not always the case. So within the first couple months, we're able to really understand what's going in and out, put some of these strategies into place, and see them start working. But part of it might depend as well in terms of the consistency. If we go back to the idea of building that reserve or building that buffer, I have one client who I've been working with for months, and she wasn't really able to start putting money into that reserve account until a few months ago because her business is more seasonal and her income isn't the same every month. And so that's why progress might look a little bit different, right? During the colder months for her, it was just kind of more survival mode. And as it's getting into the warmer months now and her business is picking up, now she has the money to be able to put things into her reserves and really save so that the next slow season isn't as stressful as this past one.
Yeah.
So
I could probably guess that's the photographer, right?
yes, yep, that is the photographer.
Yeah, I know that season and fluctuation of business very well with our entertainment company of DJing and for weddings and different seasons like that. So yeah, that's a key point on that fluctuation of things too.
Yeah, and if it takes you longer, right? If right now is not the season in which you can start building up that reserve and start paying yourself consistently, that's okay. I hesitate sometimes in giving specific numbers like, oh, 2 months, because I don't want people to evaluate themselves against that, because everyone truly is different. And I think that's the problem with some of the traditional budgeting advice out there is it's one size fits all. And it's really for people with a standard traditional 9 to 5 job where it's more consistent. And so I want you to know, if you're listening, if your income is not consistent, if right now things feel a little bit tight, that's okay. You're not behind and you can make progress with your money. And even if it takes you a little bit longer, that's okay. Everyone's unique and individual in their financial journey.
Yeah. And since we're on the topic of some of the clients that you may have worked with, if there's a contractor out there listening, someone that's just trying to figure out, their finances, what's one thing that you would ask them to, say that like there's one thing this month that they could fix and that they should fix?
I think I'm going to sound a bit like a broken record here, but I
Yeah.
would really encourage everyone to start by knowing their numbers and knowing what is coming in your account, what is coming out of your account. I think for so many people, that is going to be a great starting point, and that will help you really see where the opportunities are. If you don't know your starting numbers, you might go about trying to fix the wrong thing. Like with one of my clients, she came to me and said, I need help with decreasing my spending in my business on travel and eating out. But when we really looked at the numbers, we realized, yeah, that's an opportunity. But the bigger opportunity was how much money she had left after she paid her employees. So revenue minus payroll. And that was really the challenge, is there was not a lot left over after that. And so by figuring out her current starting point, we were able to say, actually, the better place to start is by looking at your pricing and looking at your payroll, how your compensation is structured for your employees, some of these different things, the timing with which you are getting paid, those types of things. But if we hadn't done that, we wouldn't have known that. So I would recommend that everybody start there, understanding what's coming in, and really from a cash perspective. So less about your financial statements that a bookkeeper might give you, but really what's coming in your account and what is going out of your account.
Mm-hmm. Yeah. How would you say, how crucial is that as a contractor, Jeff?
It applies to every business. I mean, if you're a contractor and you're doing 100,000 a year, 50, 100,000 a year by yourself, or, you've got 10 employees and you're doing $1 million a year, the knowing your numbers is just as important on either end of the spectrum. So,
yeah.
I did have a question for you, Kim.
Sure.
If you are a one-person operator, whatever you're doing, whether you're a handyman and you just go out and bill hourly or by the day or whatever, or you're whatever else, you have no employees, should you be paying yourself through a payroll service?
That really depends on how your business is structured. So if you are an S Corp, you are required, or C Corp, you are required to run payroll and to pay yourself as an employee because you are an employee of the business. If you are an LLC, if you're a sole proprietorship, just meaning it's you're not incorporated with the state or anything like that, then you would not be using a payroll company. You should not be running payroll through a payroll company in that case.
And if you don't do that, how do you recommend people account for payroll taxes that are still owed, or of working towards, do I really want Social Security at 68 or 7 or whatever?
Yeah. So if you are an S Corp and you're running payroll through a company like ADP, they're going to take care of that for you. They're going to be paying all of those taxes to the government, to the state, federal, on a recurring basis, whatever the frequency is, monthly, say. And what you were saying about, like, do I want to be paying Social Security? You don't have a choice, Jeff. So you have to pay those taxes. What happens if they aren't taken out on a recurring basis from a payroll company? They're taken out when you file your tax return on an annual basis. So that you'll see, if you're a business owner, there's a Schedule C where you have all of your business income and business expenses. And then there's something called a self-employment tax. And that's going to cover those things like your Social Security, Medicare, all those types of things.
So if you're not set up on a quarterly contribution in that situation, and even if you are quarterly, you've got a lot of weeks in between where you better be putting some money aside, right?
Yes, absolutely. So that's a great point there. And that can apply even to S corps as well if they're taking distributions and things like that. But let's talk about maybe an LLC, for example. So you're not running payroll. You are required, in most cases, to make quarterly tax payments to the IRS. In California, you're also required to make them to the Franchise Tax Board. That's California's version of the IRS. And in a lot of other states, that will be applicable as well. And making those quarterly taxes is one, it's required. So it's gonna, if you meet certain thresholds, that's gonna help you avoid penalties and interest when it comes time to file your tax return. But I think it's also helpful. Think about it if you were in school and had some big project to do. Right. A lot of us might leave it to kind of the night before or the last week, even if you had all semester to be working on it. But what if instead your teacher said, okay, well, a quarter of your project is going to be due after, I don't know, I had a quarter system in college, not semesters, but after like 3 weeks, a quarter will be due. And then after 7 weeks of the class, the half will be due. You would maybe still do it the night before, but you would have 4 times when you'd be doing it the night before. And so that's kind of what the IRS is doing. They're forcing you to make these quarterly payments to them. But that all goes towards what you're going to have to pay on an annual basis. And so then when you file your tax return, you'll look at what do you actually owe, and then what did you pay along the way, and basically just kind of fix the amount, make it accurate at that point.
Yeah, and optimizing that, I think, is what a lot of business owners, strive to, but just don't understand how to. Where do you see that you're educating your clients a little bit more on that tax piece?
Yeah, so just starting with educating people that they do need to pay quarterly taxes if they work for themselves, because if people come from a W-2 job where they're working for somebody else, that money is being taken out automatically by your employer, so you don't have to worry about that. And I want to emphasize here that when we're talking about making these quarterly tax payments, when we're talking about being a small business owner, that applies if you're being paid through a 1099. So even if you might not consider yourself a traditional small business owner, if you're being paid through a 1099 tax form, whether that's, if you don't know, I would go back and look at your taxes for last year, but you are required then to be paying your own taxes because your employer isn't doing that for you. But going back to strategies to help with this, I recommend that all my clients set up a specific separate savings account for taxes and that they contribute money to it regularly so that they're not scrambling the night before. They're like, oh, okay, it's due now. I have this money set aside. I'll just go ahead and send it over to the IRS or the Franchise Tax Board. And I sometimes get asked, what amount should I be setting aside? I will say, go talk to your CPA. I'm not giving tax advice here, but as a starting point, you could set aside 20% of any revenue that's coming in. So money that clients are paying you before you pay any of your expenses, 20% of that revenue. So if you get $1,000, you're putting $200 of that into that separate tax account that you're, even at a different bank is great. Out of sight, out of mind. That money is not yours. It belongs to the IRS or the Franchise Tax Board. And I think that helps, if you're doing it along the way, help it not feel so chaotic and panicky when your quarterly taxes are due.
Yeah, great points. I mean, just even a starting point right there. I think that's what a lot of people listening to this can benefit from, is just hearing just even a basic number. Even these strategies that you have, it's on point because, we're talking about, we're paying ourselves. And I think ultimately when people start a business, that's one of the top things that they might be even thinking about is like, when can I pay myself? Even how do I pay myself? So whether it's through like owner salaries, draws, reinvesting, or, knowing when not to raise your, increase your paycheck just because, you see a fluctuation in revenue coming in. It's definitely weighing out all the information you have and really understanding it. So I think that coaching piece that you have is really key for people to really understand, what you can provide them and see if it's something for them as well.
Yeah, that's a great point. And I will quickly say that in terms of the owner salaries versus draws, that's really only going to be applicable if you have an S Corp or if you have a C Corp. So if you are just a sole proprietor or an LLC, you don't need to worry about the difference between those two things. You just take the money out from the business and all your payroll taxes and things will be handled when you file your tax return. And another common question I get, your listeners might have this question, is how much should I pay myself? And it differs, right? I'm not a lawyer, but I'll give you my lawyer answer of it depends. But a good starting point is going back to what we talked about of knowing your numbers. So looking at your personal numbers, your personal expenses, and figuring out what you need on the personal side. And then that can be your target for what you pay yourself. And I want to encourage people to not just look at monthly expenses. So I think sometimes we can get in that focused view of, oh, I owe this on a monthly basis. Yeah, but you might owe some things every other month or every 3 months or every year. Maybe you have a software renewal or insurance renewal that's every year. And even things that you don't know how much they're going to be, but you're going to need them eventually, right? If you have a car or a truck, you're probably going to need to pay for repairs at some point. You don't know how much, you don't know when, but you know it's going to be greater than zero. So figuring out what you need to support your personal life, including saving for things that aren't annual expenses, and then you can use that to calculate what your business needs to pay you. And that can be a starting point.
Yeah, and that's something I think, like you mentioned, those frequently asked questions that people are going to have, and you're going to meet people at different levels, and you probably see the gradual effect of just weight lifted off their shoulders, or them having a better understanding and asking different questions to you. um, when do you see you want them to work with you all forever, of course, and all that, but when do you see them feeling like a comfortable where it's like, hey, I just want to meet with you every other quarter or every quarter? Where do you, I know, like you said, everybody's different on that level, but what's the mentality that you see on that part? Maybe like on just the way that they even talk about their finances. What do you see and how do you hear it?
Yeah, so the way that my program is set up, I have a 4-month program where I meet with people every other week. And then after the end of that, we're able to reassess and see where they're at and what kind of support they're still looking for, if any. I think one of the things that would be an indicator to me that someone is ready for less support, more autonomy, is we don't have as much to talk about during our sessions, right? They don't have as many questions that they're asking me. It's really cool seeing clients transition from texting me when they have questions or emailing me between our meetings that happen every other week, to then them coming to a session and being like, oh, I decided to do X, Y, and Z. I decided to make this investment and I know that I can afford it because I have this money set aside in this account and I updated it here in my budget. That's really cool to see when people are more confident in trusting themselves and making those decisions. And I think that's a good indication that we don't need to meet as frequently because they're coaching themselves. They're helping themselves think through those decisions.
Yeah. And through that program, I imagine there's like checklists that they're having to go through. Like, say, is there like a Monday morning checklist? Like, say, for those that sometimes are business owners, sometimes the clock never ends. But for like a Monday checklist of like, hey, this is what we got to check in on.
You can do it whatever day you want. If you want Monday's great. I personally look at my business finances twice a month on the 10th and the 25th of the month. But Monday sounds great. I would recommend people look more at the beginning, and then over time you can get to that twice a month cadence. Top things that I would recommend people looking at in terms of their weekly check-ins or whenever they look at their business or personal finances is to really understand the cash that they have in the bank. So what do I have available right now? And then to start looking ahead and planning for what do you expect to come in and what do you expect to go out. And I think that is a common scenario or common experience people have where they've been looking backwards. And I think a lot of the budgeting apps out there have you, or even bookkeeping. I think bookkeepers are great and bookkeeping is needed, but it's all very focused on looking backwards, which is great. I want to understand what I spent and what my numbers were. But what I'm really focused on helping people with and encouraging them to do is to look forward. So you're really able to plan for what's coming. And so that's what I would encourage people to do when they're looking at their numbers on Monday morning is figure out how much cash do I have available? What revenue do I expect to be coming in? What expenses do I expect to be going out? You can start with that, doing that for a week, and then you can build up over time. Then maybe you're looking 2 weeks out, 3 weeks out, 4 weeks out. And then there are sub questions you can ask yourself in those areas, right? In terms of revenue coming in, do you need to follow up with anyone to collect that revenue? In terms of expenses going out, do you have them on auto pay, or do you need to manually write a check or pay a bill online? Just having your finger on the pulse of things is so important. And I think sometimes people think of the idea of a budget as set it and forget it. You're like, great, I made a budget, check, I'm good to go. But that's not helpful, right? If you have an exercise plan and you're like, great, I created it and now it's off to the side and I'm not actually doing it, that's not helpful for you. So it needs to be something where you keep your finger on the pulse and you're checking in and looking at it every Monday, every week. That's going to help you make changes more quickly than if you look at it, say, once a month. So you might be like, oh, wait, I'm trying to think. I had this example. Oh, I had a client who, because she was looking at her debt balances, this is another topic, but she was able to see that on one of her credit cards, the 0% APR promotional period ended, and they hit her with this huge amount of interest because she didn't pay all of it off. And because she was looking at her numbers more regularly, she was able to see that quickly and reach out to them. And thankfully, she was actually able to pay it off in full and get them to reverse the interest, which was fantastic because the interest they applied was more than her current balance, which is, again, separate topic. But so looking at your numbers regularly helps you see things in advance, and it helps you follow up appropriately. So another example would be if you have a client who owes you a payment, if you're looking at things every week, you're able to see if they actually are making the payment versus every month. Right? You're able to follow up with them a lot more quickly. And I think a lot of us can probably agree that if you're following up with your clients more quickly and more timely, there's a greater chance of getting paid.
Mm-hmm. Yeah, well, they say squeaky wheel gets the grease.
Yes, that is absolutely true.
Absolutely. Yeah, that's definitely something that that falls into play on that part. So we get a chance to, I'm sorry about that. Do you hear that? I'm sorry.
Yeah, we have some nice soothing elevator music going on.
Not sure why that's going off. This will be something, that's why it's not recorded live. That's happening. I apologize.
No worries.
All right. Well, perfect. Let me. So right here, we're gonna close out the podcast here, Kim. So you gave out a lot of advice. You gave out a lot of insight to one, how you help small business owners. And like you mentioned, you can even help out, even to mid-size, whether it's 18 to however many employees, but you're helping out small business owners right now. And I think that calls to a lot of our trades people out there right now, because we're finding out that a lot of more people are actually on their way out. Now, do you see yourself speaking to any retirees, as well in this time of people retiring out of their business and trying to find like an exit plan at all?
I haven't worked too much with people who are doing exit planning. I'm mostly working with people who are currently, earning money either from working for another company or a small business owner, and who are planning to continue doing that for the foreseeable future. But I think what we're talking, and I think some of the exit planning, succession, all that stuff might fall more in the realm of a financial advisor. But I think a lot of what we're talking about today is it's very solid foundation, right? If you're looking to sell your business, pass your business on to, a partner, a child, et cetera, you want to give them a business that has solid financials and those kind of basic systems in place for budgeting, invoicing, bookkeeping, taxes, all of those types of things. So while I don't directly help people with exit planning, I think this is something that probably needs to happen before you really start having those conversations about selling your business or exiting your business.
You need to have all the basics down way
Yes, this
before
is
you
the
start.
foundation of your house that you're building.
Absolutely.
Yeah. Great point. I'm glad that you're able to tie that into that piece, because there are a lot of folks out there that are on their way out and have not started that foundation, and they are asking themselves, where is my retirement? What am I going to do now that either they're just too not able to do their job sometimes, and or just not knowing what option there are to continue their business in other ways. So, yeah.
Absolutely. I mean, the foundation that you're talking about this whole time, Kim, is the foundation for exit planning, but it's also the foundation for growth. If you have aspirations like, okay, I've got 2 employees, but I know that with a little bit of a cash flow backing for some marketing, I can triple my business next year. You can't do that if you can't handle the books at a smaller level.
That's a great point. And I think also a lot of clarity can come from doing what we've talked about today. I've had someone ask me, or just present the scenario of, can I afford to hire someone else? And again, it's that uncertainty of not knowing based on the numbers. So I think if you really understand your numbers, understand what you have coming in, going out, doing all those other foundational pieces that we talked about, that will help give you a lot more clarity of, can you afford to invest in the marketing that you talked about? Can you afford to hire another person and be able to comfortably pay them and not being worried about that? Because ultimately, if you're hiring someone, we want that to be a positive thing for your business, not an additional headache or an additional thing that you're worried about if you're going to be able to pay them.
Yeah, if you double the employees, you double payroll. You don't want to double your problems.
Yes. Good point.
Yeah. And if you have to ask yourself, can I afford a new employee? You probably can't.
That's possibly, but also you just might not know, right? If you don't have your finger on the pulse of the numbers, there's a lot of uncertainty, and especially people who don't have a lot of background or experience with managing their finances. Like, we don't know what we don't know, right? As an entrepreneur, I have had to figure out marketing and learn so much about it, but I've also relied on coaches and courses and things like that to help me, because it is a lot to try and figure out. And so I think I in general would probably say that's true. If you're not sure, maybe you can't afford it. But also, getting clearer on your numbers can help make that decision.
Well, if you're looking at your numbers every week and you see, hey, I've got an excess, I've got an excess, I've got an excess, and a month later, can I afford an employee? You know the answer because you've been reviewing your books that are clean and consistent for several weeks, several months, whatever the time frame is. So I think the service you're bringing to people for that type of clarity in their business and their personal life is so valuable that more people should do it.
Thank you. I appreciate you saying that.
Yeah, of course. And we're excited because, in a sense, we found out that you're part of the BBB and you mentioned some courses and items that have helped out small businesses. And that's where we're recording right here at the Ignite BBB podcast studio. Big shout out to Sam and the whole team over here because they have a lot of programs that if you are a small business owner, to help you out with a lot of different areas aside from finances or financials, because Kim is going to be the one that's helping you out with finances and coaching you. But there's going to be a big piece here. So we're excited. I know you talked about, hopefully you're on a panel here at BBB. So everybody keep an eye out for that. We're in San Diego area. But Kim, please go ahead and let everybody know, how would they reach out to you if they got questions? They just want to have like a discovery call with you. What's the best way to reach out to you and that we can share to everybody?
Yeah, so you can go to my website. It's kpwfinancialcoaching.com. From there, you'll see the link to be able to book a free call. You can learn more about my services. I'm also on LinkedIn under Kim Pike-Walters, space between Pike and Walters, no hyphen. And I'm on Instagram as Money Coach Kim. So you're welcome to follow me any of those places, reach out, message me, and I imagine maybe some of that will be in the show notes if people are driving and can't write that down right now.
Yes. Yeah, absolutely. Yeah, definitely. We're going to share that out to everybody so they can see that. And what a great insight. Again, we haven't had someone in the financial area on the show in a while. So I think it's always a nice refresher for anybody out there listening to go back and know their numbers, right?
Yes.
All right.
The
well, thank you,
repetition
everybody.
worked. Way to go, Danny.
Yes.
You
Trust
did
me,
it.
I think you might be getting a call pretty soon. So thank you so much for everybody that's listening in. Again, share it out there with everybody if you feel like this is something that resonates with you. Or if you're even within the company and you want to share it with your boss and you might see yourself in that position of taking on some of the financial role. Be ambitious, be curious, and know your numbers.
Absolutely.
All right. Everybody, thank you so much. And thank you, Kim.
Thank you, Kim.
Thank you.